Good evening, ladies and gentlemen. Welcome back to Walk the Block. We're navigating digital finance all together. Got a good show here for you lined up, but to be honest with you, in the world of crypto news, it is a tad bit slow, except for the HEX and Pulse Chain community. There have been some massive pumps, and we have one of our team that is doing some very much on the ground research, giving the latest and greatest stats for that. So we're going to be talking about what's going on there. But the overall news for the crypto market is that there's actually a lot of shakeups going on. A lot of different companies are taking pivots, making different moves, and it's also not just crypto. We also have a small update on Berkshire Hathaway. Yes, they've famously been out of the market for a while now, but it appears that they're actually starting to reinvest some stuff, and it is at the direction of the new head of the company. So we got a lot to talk about tonight, but before we get to all that, hello, my name is Zenith. I'm your host for the evening, and I am joined by my excellent co-host, Tracker. How you doing, buddy?
Hey man, what's going on, dude? Yeah. Just to clarify that, so yeah, they've been holding a lot in equities. They just basically are sitting on a $360 billion of cash pile in short-term treasuries that they're going to start deploying. We'll dive into that though. But yeah. That's a lot of money to start deploying to. Now they're not going to do it all, but obviously that's going to be another big buyer coming in on things. That should also feed the traditional markets hitting fresh new highs today. So that should probably, who knows, maybe they're coming in on the top, maybe they're coming in at the right time, who knows, we'll see. But yeah, a lot of stuff's moving, and we've yeah, like we said, we'll dive into it, but Pulse Chain's definitely the Richard Heart ecosystem's definitely been having a lot of movement since it's been bludgeoned for about 12 months. Now it's starting to finally get action, certainly showing signs of bottoming and starting to have momentums. But the traders are still battling each other, the sellers and the buyers, and we'll dive into some things that are coming in to tell people like what's coming down the pike, what we're seeing, and why this is probably different than other times. So we'll talk about that more.
Fair enough. Tell you what, let's go ahead and start it off with the old classic. We're going to take a look at the markets, what's going on there. So good news, S&P 500, new all-time high today. Looking at, what was that tiny little wick there? 779. Yep, so it appeared that we might have been having a little bit of a rollover, but nope, the price keeps going up. So I wonder what that translates to for Bitcoin.
Well, just to feed that too, just keeping this in mind, Tom Lee back in December, our friend Tom Lee, back in December, he called for this price range in the S&P was going to be the top for the year. So we'll see if that holds true, but not a bad call on December 11th, 2025. We've got it written down on the charts, man. He wrote those down. He stated that this was going to be the high for the S&P 500 this year. We'll see if it doesn't keep grinding higher, but he did make that call quite a ways out. I mean, that was going all the way back December 2025. That was coming out of when things were looking a little bit toppy already. I think people were thinking the top was already in and 7,000 was going to be it, but he called it for another 7,800. So we'll see if that keeps continuing.
That's true. Yeah. And by the way, we were sitting pretty far above our moving averages, which indicates a rather strong move. Doesn't quite indicate a reversal. And if we look at the RSI, we're almost in that overbought territory. And if we can get up in that overbought territory, that's when price can rip. So just a little bit of information for the S&P if you guys are interested in that stuff. I know all of our 401ks are probably, so might as well. Alrighty, over to Bitcoin. What do we got going on? More sideways it looks like. Yeah, price is sitting at about $63,400 right now. Notably, we are again doing this weird little dance between our two moving averages here. So the yellow line, that is our 20-day, our short term, and the orange is our 50-day. That's our medium term. We have come back down to the 50, below the 20 for pretty much the third time at this point. And the volume isn't dramatically increasing. The RSI overall is staying relatively stable, all things said. So we're kind of in a bit of a holding pattern when it comes to this, to be honest, as far as the price action goes. Still, the big question remains, which is, what are we doing with 60-day cycles? Because if you count what we have currently going on right now, there's not really a clear low for the cycle end that started back on the 5th of June. But if you count it all the way today, that's day 70. That's going a little too far for having a day 10 high. I happen to think that a more likely scenario is starting to form, which is that we're just going to call it pretty much just a failed cycle because we had the lows lower than the start. But we also do have this small peak, small low right here where we drop below the 50-day moving average before we start moving up. That's right at day 59, which is pretty much average. And then if that's the case, then that means we're basically on day 11 with a high on day 6. So very early on in a new cycle, still haven't dropped below it. So that's why I say this is becoming more plausible. But realistically, it's going to need another week or two of data before we can actually truly figure out what's going on with the 60-day cycles. The reason that I say that is also because if you take the other case, which is that this right here is the start of the cycle, we're only on day 44, meaning that we still pretty much got 16 days to go in that cycle theoretically. And if that's the case, price action could go down. But if it's the case where we are on day 11, that means that price is probably looking to go up to start climbing towards the cycle high, which the way it's forming up right now, the 200-day moving average, the red line here, that's coming down as well. So it does make sense for both of these scenarios, but we just got so much muddy data going on with the last like 60 days that we don't really know what's going on right now. We can only make our best guesses based on what we believe is the most probabilistic answer. There you go. How non-committal was that, Tracker?
Well, I mean, we said it last week. Well, what did we expect? More chop sideways. I mean, it is what it is. It's just not budging. I think the fact that the Clarity Act got pushed out until what did they say? They're going to try to come back and redeem in September, which once again, it's just going to be another thing. But you notice how that got pushed down, didn't even budge the prices. Everyone, the crypto markets have just basically just don't care. They just don't care at this point. They're just going to keep grinding sideways. I don't know what to expect. Same, and I know you're going to flip over to Ethereum. It's the same thing. It's just grinding sideways, just chop sideways action.
Even more so on Ethereum since the last time we looked
Yeah.
at it. Like literally just flipping around this 20-day moving average.
Yeah, it's just sitting there. And it's going to just keep grinding sideways. Now everybody who's on the sidelines, they're just kind of patiently waiting, thinking is the low going to come in or not, and everyone's probably eyeing. Honestly, everyone's looking for October. Everyone's looking at October, maybe a little earlier, but I just don't know. I think the more we go, the more sideways we go, the stronger this bottom is getting put in. But if you zoom out some, at least with Ethereum, I didn't look at Bitcoin, but I know with Ethereum, the current highs in this range that we're in right now, you're lining up to where beginning of 2026 bottom drop was. So just for 2026, if you just want to zoom in a little bit, just get 2026. What happens is when you get a drop in a market, so to see when the price is there low in March, right there, March 2026, what used to becomes, which was support, now becomes resistance. And that's essentially what we're doing. We're bumping up to the resistance levels that used to be support. And that's just typically how markets work. So now we're kind of in this range. So the longer we go sideways, the longer we're going to either saying, hey, we're trying to build a base here to make that next push up to break through that point of control, which is right above, your white line there. We're trying to bust through that. And that will start to show somewhat of a reversal. Now, is it a long-term reversal? I don't know about that, but it's working on it, is what we're saying here. And it takes time to digest these things. Even if ETH or Bitcoin were to go back down and retest the lows, as long as those lows hold up, you're still in the sideways consolidation where you want to see a nice base put in, because that's going to add for a real long-term support level. That's going to help in the future when we do go higher and then we come back down eventually at some point in time and retrace. You want to see these levels hold. So the more support can get put in at those levels, the better. I'm looking at Bitcoin now, and it's the same thing. You're running into the same type of resistance. It's the same scenario. You're bumping up against that point of control, which is right there at that. And also, if you're looking at the fib levels too on this drop, so all the drops from May all the way down to July's bottom, if you do a fib level, you're kind of bumping up near that point. What is it? The 0.37 level in the fib retracement lines.
Yeah,
0.38. Yeah, 382. So you're bumping up against now. Ethereum got back up to 0.5 on the fib levels for that. So it did bump back up and got to that halfway fib level, which is typical to a Fibonacci's retracement, 50% retrace when you do a drop. So far everything's kind of looking normal right now as far as just the levels and how they're reacting. And then other things I was kind of looking at, I was trying to take not to go off the tangent here, but I also was looking at gold and silver just because I'm just curious because of these other assets that have done this. Looks like silver's bottom has been finally put in. It could drop lower certainly, and gold could do too, but it's trying to stop the bleeding from the downturn. But you know, like for example, go back to that chart you just were on, the gold one. So gold, you could see it. I could easily see gold pull all the way back down to those levels back in 2025 July. See right there, that pocket there. You could see it just kind of drop back down there. It's trying to hold here. It could hold, but if not, it drops back down there. Same thing with silver. It's very similar. Silver maybe has a little bit more support because it did come back to its breakout channel. Reason why I'm bringing all this stuff up is because the fact that crypto markets now are playing with TradFi and all these other. This is where the money's moving around. It's something we have to kind of keep an eye on for these kind of things to see where money may flock or may go. I know we're going to talk about Berkshire Hathaway and we're talking about some of the things where money coming in, but these are just some of the things I'm looking at as well. But right now, honestly, I've been just kind of sitting sideways on Ethereum. It's been grinding sideways. If it wants to pull back, I've got dry powder I've been building. I will be more than happy to put more dry powder to work for Ethereum. If it wants to pull back more, if it wants to keep going sideways, then hey, that's it. You got to be patient. We were working with some of the members in our chat and we were having some really good discussions in our tables. And the biggest takeaway, I'm going to say the biggest takeaway there, one thing that kept coming up and I kept trying to make sure everybody understands it is, and I'm almost speaking to myself, you always want to put yourself in a position that you're going to do, you're good if it goes up, you're good if the price goes down. You want to be in a place where you're going to benefit one way or another. Either going to get cheaper prices or you're going to enjoy the ride you got in. But you don't want to put you don't want to dispose all your dry powder and you don't want to have it all invested either. So you want to be able to be somewhere in the middle there. Certainly at these levels we keep pounding the table because we think we're closer to the bottom than obviously then we're very close to the bottom, it feels like. Whether or not like I said, we've always said the risk is to the downside. I did send you the on-chain look into bitcoin.com. I sent you that link, the last one I sent to you internally. If you look at that, just to show you how wonky some of these on-chain metrics now are that have been manipulated. So we never got the true top, like we did the last cycles, right? Never got anything remotely close to it. So, and right now, I wouldn't be shocked if it stops here, doesn't get back down into and then a nice pocket of green that sits there for a little while. And if it does, maybe it gets bought up quickly. So I think it's just, like I said, there's a lot of variables looking at this. You introduce hedge funds that have a lot of money that are invested and they're using not just these tools, they're using a ton. They have everything at their disposal for their quants. And they can basically look at all this stuff and work every angle and everything like that. So I really think the ones who have been accumulating this whole time are going to try to prop prices up and they don't want them to go down to allow competitors and others to get into the market since they've already been paying the dollar cost average. They don't want somebody to get a free lunch and come in here and just pick it up on the bottom. So I have a feeling that's kind of the games that are being played, at least in the Wall Street. But that was just one thing I noticed.
No, yeah. By the way, MVRV Z-score, this is the market value realized value Z-score. Pretty much what this tool does is it helps people identify tops and bottoms. So anytime you get into a red, that's potentially a top. Anytime you get into the green, that's potentially a bottom. And if you look at it, it's been the bottoms have been more accurate than the tops for sure. But where we are right now is that we are really close to that zero level. We're like right at like 0.3. We were down at like 0.18. But once you really get down into like zero or that negative number, that truly is the bottom. This is one of those things that we've talked about a number of times on the show. And it's one of the indicators that we're personally using to identify bottoms. So you can look at this and take into consideration the fact that we didn't have really a top last time around. So that could indicate we might not really have a bottom this time around, just because this is a ratio between the market value and the realized value. Basically, what it's trading for on the market versus the average cost of everyone that bought into it. So if we never got super blown off the top, it means that the realized value at the top was closer to the market value. And if kind of goes the opposite direction, which is that if the dumps aren't as hard, then it means that we might not get there. But as far as like a bottom tool, I think this is a pretty good one. And the reading we're getting right now, it's like we're almost there. It pretty much would take just like one more big drop and it would be down in that zero or negative level.
Right. Yep. And I sent you the other one on the net unrealized profit loss. That one, never really got that as well. Never really got into euphoria area, and then now capitulations never got down there either. So
Yeah.
muted top, muted bottom seems about right. Why would anybody who's looking at all this propping things up that can easily control the markets? Because I mean, let's call it let's call it what it is. I mean, if you got market cap so low, we can easily hold prop the values up. So why would you let it get down into these more juicier prices to allow people to come in? And that's the narrative I'm going to stick with until proven otherwise. Not to say the 4-year cycle hasn't been intact. So if we just keep going sideways and grinding sideways all the way until October, November, and then we start to move up, everyone can say, hey, the 4-year cycle is still intact, because, and it's theoretically it is. That's the bottom. It's just that you can't rely on on-chain. These on-chain data, they tend to change these things too. So bottom line is you can use these as other indicators to tell you kind of a warning, but you can't really rely on them to be, basically binary, like buy or sell. You can't do it like that. It's just another tool to look at it. So right now I'm just thinking with the whole price act, we're going to keep grinding sideways to down some. We could drop it down, retest the lows, or we could grind and maybe or pop back up. Some we could certainly do that, but I don't see any major breakout. Start seeing buying pressure coming in, which I don't necessarily know where that buying pressure is going to come in at and why. Outside of people knowing that, hey, 4-year cycle's over, right? The 4-year cycle's on tag. Now is the time to start buying. That would certainly provide more buyers to come in. Just if you're sticking to the 4-year cycle gun, then that's why I think we're kind of just buying time, waiting to get to that point to really start making moves to go up. That or Clarity Act gets passed. And I still think if Clarity Act gets passed, I think it's going to be a sell the news event. We probably rally. It probably happens. We probably rally up for maybe a day or two, maybe have a good run up, and then it just sells off, and then we see where it goes from there.
Yeah, there would be a great irony to the Clarity Act getting passed and it being like the sell the news event that creates the bottom for the year. The most bullish news that we've gotten for crypto drops the price to the ultimate level. It's like, oh my gosh, I could see it happen.
Well, I would say it would happen if we got a run up into it, like all of a sudden they think they got the numbers. Okay, people are starting to get, you start seeing movement going to the upside before the announcement. And then the announcement comes out and it clarifies it and it states that it happened. Then you could maybe have that day or maybe a few days later, it starts to run, but then you'll see the sellers taking profits, which is pretty much it. So then it'll retrace. Then the question would be, okay, where's it retrace to? And wherever it retraces to, then that would be the time for it to start moving back up again. Outside of any black swan events, that's probably what will transpire.
Yeah, thinking about it, that sounds about right.
But like I said, prices are still really cheap. Still on a cost and average. If it wants to come down, I'll be more than happy to put dry powder to work. If it wants to go up, that's cool too. I'm heavily exposed.
True. By the way, speaking of prices, we do have some very exciting news for all the Hexkins and Polskins out there. So, Tracker, what's been going on lately?
Well, it was funny because like almost exactly to the month tomorrow, well, I guess today, tonight, how you want to look at it. But yeah, right around July 14th, movement started going up. Prices started moving up. Keep in mind, if you zoom out on the charts, and you don't have to do this, but I mean, we're still down tremendously. Anything in Pulse Chain in the ecosystem is bludgeoned. Like it's just been beat down bad. Yeah, so it looks like nothing. But here's the thing. When you zoom out and look at something like the HEX price, you got a really nice bottoming signal. Like it really started to bottom out. And do you have the HEX one? Yeah, bring up the RSI on there too. Because when I was looking at the RSI on this, when we finally hit the bottom or that big spike down, RSI got down to 16 on the RSI. Is that the one I'm looking at here? Yeah, I think you're on. Oh, you're on the weekly. Switch to the day. If you switch to the daily, you'll see what I'm talking about right there.
That one.
That's a big RSI drop. That's basically when everything's been exhausted to the downside. And there's been the slow just grinding down. And you're getting this kind of a bottoming signal, kind of a bowl-shaped bottoming signal. And then all of a sudden, prices started rallying hard. So over the last 30 days, we've been seeing some pretty big movements. And I mean, I'll just tell you right now, some of those movements. The P hex version hex, but we're going to call it P just for clarity here, is 293% in 30 days. EHEX 348% in 3 days. Pulse has been the biggest lagger at only 90%. Pulse X has only been at 128%. Then you move into some more of the reason I'll bring up these other coins is because the fact that they were blessed by RH's development team, and they're from Alex from the Hedron system. It's Icosa and Hedron. So you basically are looking at P Icosas. Keep in mind, these have extremely low liquidity. So if you're going in there and you think you're going to put big chunks of money in there, you're going to have a lot of slippage. So be careful if you are messing with them. But PHEX had 200% return. Icosa had 343%. So much heavier on the E side. Same thing with the Hedron side. P Hedron had 178% return, and E Hedron had 227% return. So the narrative here is the E side are starting to get some love, and I think there's for a good reason. And we've been talking about this, especially with our members, that we think that, and just full disclosure, I did end some stakes over the last few weeks, we'll say, and some of these were old. They weren't even worth it. So I was like, I'm not worried about it. They're on the Ethereum. I had the Pulse copies. I'm not worried about it. But now with these prices that just came up, it's like, okay, hey, maybe they're worth it. And I went out there and thinking that the Ethereum transaction fees were going to be a lot, right? I was thinking like, okay, let me look, just for giggles, let me go there and see what this is going to cost. Keeping in mind, back when Ethereum transaction fees were high a few years ago, to end some of these stakes, I'm not lying, $750 to end stakes. And I'm like, wait, what? Like, and this is how bad it was. Well, with the new upgrades and some of the stuff that they've done, and also things being very calm on the Ethereum, I was able to end some old stakes for less than $1. Now I moved down. I just changed my gas fees to the lowest end, and they went through just fine. It ain't fast. Didn't have to wait long at all, almost instantly. So I would say drop your transaction fees to the lowest possible, and then voila, you can end your stakes, and you can get some EHEX on the Ethereum side, or EACOS or EHEX or whatever you have over there you may have forgotten about, left to forgot. You can actually pick these up for now. It's nothing to unstake them. So I'm looking at that as a big narrative. So Pulse Chain was created because of the Ethereum fees. Right now, they're minuscule. So that's why I think some of these E versions could come back into favor of some of these investors that have been sitting on them. I've almost wrote them off for a loss. So keep that in mind. So I'm thinking that has another thing. And then of course the whole argument between the PHEX and EHEX, is EHEX going to get back to parity with PHEX and stuff? And if that does, then that's going to pull those other coins up. And that's always been the happening. The thing on Pulse Chain that's always been good is you could always do these ratio tradings between the P and the E versions. If you know what you're doing. If you don't know what you're doing, make sure you have somebody helping you do that, because you can really mess yourself up and you can get easily confused if you're not paying attention and you're not doing your due diligence. But yeah, we were doing that for the first few years of the Pulse Chain, and we're more than able to triple our bags by doing that, just by simply watching some of the ratios and taking advantage of people's mistakes by them not understanding slippage. So you see these opportunities where you see these big wicks down because somebody just moved or sold a trade. They didn't realize that the liquidity was low, so they had this massive slippage. You come in there and you're able to then switch it back over and capture those, those unfortunate mistakes others are having. But hey, that's the name of the game. People know what they're doing. They're going to make mistakes, and if you don't know what you're doing, it's best to maybe get help or don't do it. But I guess what I'm saying here is, like, and now the big question is are these funds, where is these funds coming from? Where's these bridging coming in through? So over the last 90 days, we're looking at roughly $3.5 million has been bridged in. Now that sounds like that's enough. And like, what $1 liquidity? So you're bridging that kind of money in. Keeping in mind, there's also around $35 to $40 million. Obviously it's rough, but somewhere in that ballpark of stable coins sitting over there too. So you do the math. It doesn't take a very little percentage of that, 5-10% of any of this to really push these prices up high. And you're seeing it now too. And what's interesting now is over the last 30 days, these things are starting to move up with kind of a 40% pullback. Then it ramps back up. Now we're in another pullback. We're in the second pullback currently right now on these prices. So, but it seems like the money just keeps bridging in. So some people are speculating, okay, is this the OA bridging in money? Or is this other people bridging in the money? just seeing this as an opportunity because it's such a cheap opportunity. So that's to be not, nobody's really going to know for sure, because here's why. The OA was sitting on all those SAC funds, right? Keeping in mind, the OA at the time, a few years ago, when they were coming out with it, it was one of the top 5 or top 6 Ethereum holders. That Ethereum hasn't just disappeared. Now it went away because of people trying to front run the moves and stuff. So all that got moved over to mixers. So that all got dispersed across a lot of different wallets. So could this money be coming in from some of that? Maybe, maybe not. Maybe it's other funds that were out there because there's so much money the OA has been sitting on. Keeping in mind, the OA sits on a massive amount of stakes that are coming out of HEX in general. So maybe funds are coming out of that somehow. What we're saying here in the pulse chain, you can laugh at it all you want, but you have exhausted sellers. You've gotten down to almost no liquidity. The people that are still here are here, and they're not going to be trying to leave unless obviously there's massive pumps and they might exit. But there's a lot of possibility that funds could come back into this side of the house. And if more funds keep coming in, especially if it just keeps coming in at a slow pace, it's going to eat up all the sellers. And what's going to happen is sellers are going to sell at certain prices, and they're going to see those prices just leave them. And then that starts to spark potential FOMO. And then that just kind of feeds it. And then what else does it happen? Well, when you start seeing these pairs, keep in mind, if you go look at, like, say, Market Cap or Coin Paprika or any of these sites, you're going to notice here that these coins have been moving up in the rankings. And then you look at crypto bubbles, crypto banters, bubbles charts that people watch, and it just keeps showing again and again. The best marketing is big green candles and big green bubbles. That's the best marketing. So if that starts attracting and people are like, wait, what is going on over here? So the question is the OA front running this move ahead of the end of the 4-year cycle, which could also lead to Ethereum, leading a charge because of the Clarity Act getting passed. So there's all these possibilities. I guess what we're ultimately trying to say here is there's a lot more risk to the upside in the pulse chain area than there is to the downside. Not to say we couldn't go back down and retest. We certainly could. But what we're telling you is capital keeps getting bridged in, and the more powder it keeps getting bridged in, the more chances that powder is going to start getting put to use, and it's probably already getting put to use. So there's things like that, and I think that's essentially what's going on. No one's going to know exactly who it is or what's going on, but that's what I see. And to me, I've been betting, and others in our members have been betting that we should be getting in. And I know, Zenith, we laughed about it, but I remember one of our shows we had, it was right before the July 14th. I forgot what show it was. I don't remember. We were joking, me and you were talking offline in the green room, because I was looking at it, I was like, man, these prices look really low right now. Everything looks kind of bottomed out. Maybe we should put some dry powder in. And I hadn't really bridged any funds there to try to move it, but it was like I think it was our sixth show on the 16th or something. But I know it was right around when this movement started, or right at the very beginning before anything really was getting moved. And it was funny because, like, I guess my spidey senses were starting to go off, and I guess a lot of times we kind of don't pay attention to that. I was going to do it regardless, but I decided to wait for some things to get clear. But yeah, I've already been putting dry powder to work over the last few weeks. But just, yeah, I think that's kind of sums it up. I don't know how else to put it. I just think it's interesting. But Pulse being the L1 has been the least moving. Pulse X, which is probably the most deflationary coin that gets burnt. Keep in mind, people may not know this, but 10% of the Pulse X supply has been burnt since Pulse X has been around. So for 3 years, 10% of the supply has been burnt. That's a lot gone, and that's going to keep burning. Pulse is also burning too. They also keep burning Pulse. Every time there's transaction, Pulse also gets burnt too. So there's those deflationary. EHEX and PHEX are obviously inflationary. Hedron is too. Icosa as well. There's many other coins on the market. So I'm not just trying to say that. There's just what I'm getting at. I'm looking at the ones that RH has blessed. That's why I'm looking at just those. And the incentive token as well has obviously been, people have been looking at it too. But at these prices, if you've been holding this whole time, if you put a little bit of dry powder to work here at these levels, you can seriously build your bags up quickly to, even if you were going to look at these positions you're putting on now as short-term trades, meaning maybe I want to get in here. So if it does get back to, does a 10X, you can then get some of your money out of this ecosystem and then have dry powder for either reinvesting it here or elsewhere. But It's just another way to put yourself in a better position if you've been sitting in this ecosystem for 3 years and just feeling a lot of pain. But there has been a lot of opportunities along the way. It's just that if you weren't taking them at those times, then yeah, you're kind of sitting sidelines. But that's my take on everything.
Fair enough. And you've also been sending me some cool links, and we also have an update from Dace inside the private membership there with a very cool new tool. First up, you sent me this guy, fightforhex.com. We have a depiction
this
of
came
an
from
ongoing
Dace.
battle between between the price action. It's realistically, it's just something fun to look at, I think, but it does kind of show you with this little window down to the right what's going on within the pools and what the pressure looks like for which way price is going to be going. And pretty much the more that you have stacked up on either side, that's kind of which way it's going. This is again based on the flow of how orders are fulfilled on the market. And this is just a fun representation of it. So in this case, oh, look at that. We actually just had the bulls won. So price is actually shifting upwards now, and the lines are going to reset, and we'll see the pools. Oh, there you go. Look at that. Wow. Funny that
Cool
happened.
visual. It's a very cool visual. It's just funny to watch. So yeah, you're seeing a battle between the sellers and the buyers, and
Yeah.
and that's what the battle is going on. Which is funny because you have buyers and sellers. You don't think of other people on the other end doing this. Now, don't get me wrong, they could be bots. Certainly, we all know that it could be some of those bots too. But I just think it's funny because you have a visual representation. That I thought that was really funny.
Oh, for sure.
That's
Yeah.
pretty cool. But yeah,
In
but
my
yeah,
personal opinion, though, there's an even cooler thing going on, though. And this is something that Dace has been working on very closely. And that is the gain stage. This is now pretty much an official part of the private Telegram that we have. And this is tracking inflows and outflows when it comes to overall money on Pulse Chain.
yeah, and this is just a little bit you're looking at. He's got a lot more than just this
This is
there. We're
just
not going to be
one.
sharing all. Yeah, we're just giving a little teaser here. We've got this going on, which I know in some of the sites you could go to and you could probably see this, and then you might have some tools you could probably go and do that. But he's built in all this, and there's more to come. So there's a lot of questions we have. Okay, you could come up with other questions. Okay, so where essentially is all this coming from? Which addresses are bringing the most? What could those change? What could those wallets be tied to? That's another thing. How long are there's so much analytics now you can pull and you can build UIs on all this stuff now. Whole chain community is really big on this. Like
Oh, yeah.
you can bash the prices all day long. I'll give you that. 100% give you that, but you cannot bash a lot of the products that are getting developed out there, especially Liberty Swap. I know they're doing their the wallet with the protection with GK with I know we're going to be diving into that pretty soon, but there's a lot of cool. That's protection side of the house getting done. You have dexes getting created, pretty awesome. There's tons and tons of analytics that have been built over the years, and so many different charts and things out there. So the tools aren't the problem. The tech, trust me, there's a lot of cool tools out there. There's other tools out there where allow you to stake and not just do LP farms, but I mean actually like lock your stuff up. I'm looking at liquid loans. I'm looking at Power City and these products that have been around for a while. That allow you to, there's so many cool tools out there that I don't think people understand, and because you got to understand though, unless you're in the Hex community, you're not going to know these tools. You're not going to know about it because guess what? There's no central exchanges out there that'll freaking put the damn coin out there on their stuff, and they won't promote it because. Let me explain how the central exchanges work. Central exchanges will post your tokens if you're willing to give them. This fluctuates, but normally it's somewhere in the ballpark of 10% of your token supply. You got to give it to the central exchange to get listed on these central exchanges. So you got to pay. You got to basically you're getting taxed to put your stuff out there. And yet, why is that? Why are you getting taxed to put it out there? Now, I get it that these central exchanges want to post stuff, but the stuff that was happening with HEX, especially on Coin Market Cap, they were basically having it stuck at 201 for years. They would never move it. Occasionally, there'd be some glitches, and you'd see it pop up on the top 10 market caps, but it was being gate kept essentially, and it's because Pulse Chain is true DeFi. It's not linked to anything. So what I'm saying is the products, the ecosystem, everything's great. If you want to bash the prices, bash the prices. That's fine. But I think of all of us that are still here, we believe in the products, believe in everything going on. It has a huge community. I know for those people. So I'm really talking to people who don't know about it. It's something I would highly invest and look at it. There's so much stuff out there, and it's just it's one of those things that if more and more people could figure out about this, see how it is, they would be impressed with it. There hasn't been outages on PulseX. It's been up 100%. HEX has been up 100%. Like everything has been reliable, done what it said it's going to do, while there's just rugs and hacks and everything else around the crypto industry going on everywhere. And now them addressing Liberty Swap seems to be one of the new boys on the block over the last year, pumping out incredible products. So check out Liberty Swap if you're not familiar with what they do. And I'll be very interested to dive into the wallets that they've got. So essentially, it's going to mask your transactions. So you can do transactions and stuff, but you can hide them. And it does it through basically, it uses almost like a temporary wallet that allows the transaction to go through, but then that basically goes away, and then the funds can still be. So it's a way to mask the actual transaction, so you actually have some privacy. I know that's a big thing in the DeFi world. You can just look no further than some of the security problems we're having over in England, and some of the countries where people are actually getting robbed and mugged because of it. Because if you get doxxed, and you're sitting on a nice package of money, it's going to be brutal. Now, the joke is now, though, it's funny because if you get doxxed now, no big worries. People are going to laugh at you because you got crypto. But what happens when crypto comes back in vogue and it starts doing really well? Well, there's a problem. That's a big problem. And if you're going to sit there and trust others to protect you, you're in for a rude awakening. There was just a freaking data leak for Treasure it just came out a couple of days ago, saying they put out to their customers that their shipping order books, where they ship out all their wallets to, that data got leaked. So great. No problems there. Now everybody knows who owns a Treasure. That's a huge problem, man. That's a big problem. So it's things like this. You can never underestimate human error, mistakes from companies, because they're just regular people working there. And unfortunately, when you have hackers or people that are getting paid to do notorious things, then they will, and various things I should say, they are going to, it's easy to exploit these companies. And this is why you have to protect yourself. I mean, how many times have you gotten the mail like, oh, sorry, your data was in a data breach, and we're sorry about that, and here's a free year service for like LifeLock or something. Like, that doesn't fix the problem.
No.
So these are the things that I think people are listening. But anyhow, so Liberty Hop's pushing out a great feature with basically trying to give you more protection and more locking up your transactions so people can't necessarily see everything you're doing, because that's the last thing you need. And people will say, oh, it's because you're trying to hide tax to hide the government. No, dude, that's not the problem, man. That ain't this. Trust me. That's the least of our worries.
So it's really not. And by the way, folks, if you're interested in the Gain Stage protocol and all the latest and greatest when it comes to Pulse Chain updates and news, you can find that inside of our private Telegram, which, by the way, you can join if you head on over to walktheblockndf.com, find the membership tab there, and sign up through there. We have a official dedicated channel now just for all the Gain Stage updates, so you can keep track of what's coming across the bridges. And then also, this is one of the communities that we are heavily involved in, not just financially, but also a lot of time and effort as well. We've traveled across the country for HEX and Pulse Chain events. I even was invited to speak at a few of the conferences, which I'm very honored about. We've made a lot of good friends through there. So yeah, we're still deeply tied into that community. And if you want to keep up with it, get inside the private Telegrams. What are the ways to do that? So there you go. Alrighty, with that being said, let's go ahead and shift over towards the news today. Let's start off big picture. So up first, we got Berkshire Hathaway. $360 billion cash pile fell $9 billion under the new CEO, who net purchased $12 billion in stock this year. Okay, let's see what's going on. Warren Buffett retired as the CEO at the end of 2025. He handed the incoming CEO, Greg Abel, a massive war chest of almost $370 billion. The cash hoard has come down, but not much, still sitting at about $360 billion in cash and short-term treasuries at the end of the second quarter. They also held about $323 billion in equity securities in quarter two and was a net buyer of roughly $12 billion in stocks in the first half of 2026. Additionally, the company has made 3 deals, including a $9.7 billion OxyChem acquisition and the $8.5 billion Taylor Morrison acquisition and a $10 billion private placement with Alphabet. Let's see here. Recent moves show that the new CEO is willing to act when the setup is right. The private placement with Alphabet helps funds the tech giant's artificial intelligence infrastructure build-out, which could fuel growth in its cloud business. This comes on the top of 54 million shares Berkshire has already held in Google's parent company in the first quarter. Along with the previous deals, Abel is already signaling that Berkshire will stick to Buffett's playbook, putting cash to work in durable businesses when valuations make sense. In the meantime, Berkshire's cash hoard is earning real money in today's higher rate environment. Discount at accretion on the United States Treasuries topped $6 billion in the first half of 2026 and about $12 billion annualized, reflecting the interest becoming recognized on their own T-bills. So, at a glance, sitting on a lot of cash, sitting on a lot of T-bills, but they're signaling that they're going to get back in the market. And this is an interesting point of order because if we go back to this screen, the S&P 500 has been doing pretty well overall. Granted, they don't specifically invest in the S&P 500, but individual businesses. But this is a good representation of the overall business environment, which is that it's kind of been on a rip for a while. So this is, in my opinion, one of those few, very, very few in between Berkshire Hathaway L's, which is they got out of the market pretty much somewhere around here. And then they've missed out on pretty much the majority of the growth for 2025 and 2026. So what's our overall takeaway here? Are they changing positions? Is it just reconfiguration of leadership? What's going on?
I think it's a little bit of both, honestly, is what's going on there. But I'm more curious, like, are they going to be investing in crypto? I'm curious because I don't know if they have any holdings in crypto at all.
They have AI holdings, and you know what AI likes?
Crypto.
AI likes crypto.
Yeah, I just don't know if they have any direct. That's the other thing that's kind of interesting. Like, why would you not at least be putting something? I think it's interesting.
I think that Berkshire Hathaway is definitely more of a traditional company. Granted, they're still one of the biggest name recognitions out there. So I kind of understand why they have not been as into crypto as like the rest of TradFi has been over the last 4 years. But the overall point that I think we want to bring up with this story is that it's part one in a collection of stories tonight, which is that conditions are changing and people are making moves. This is arguably one of the largest giants when it comes to traditional finance investing that is starting to shift positions. This also comes off the back of we're making a new all-time high at pretty much the point that Tom Lee said we'd top out for the year. So it kind of gives doubt to either one of those positions, which is there's more to go in very specific sectors if you're Berkshire Hathaway, or it could be that there's still more juice left to squeeze, which they're seeing in the markets, and that we could keep going up from here.
Yeah, I mean, the fact that they're willing to put more capital to it and now I think is definitely a positive for the overall markets. And I think more people are thinking we're going to bubble up too. But yeah, they have no holdings in Bitcoin, or Ethereum, or any other cryptocurrencies. Like, what? They don't even hold crypto ETFs. Like, they need to get, so I don't know, this new person that's coming on, maybe they'll start looking at that, and maybe, who knows, maybe that'll be a new buyer that comes into that, because they've got so much. It doesn't take a lot. They wouldn't have to put a ton of money to it, considering to get some positions going on. So that would be interesting. So that's how I'm looking at that. The fact that they're bringing in more capital, it's going to be more capital being invested, essentially, is what it's going to be. So good for the overall markets to prop them up, because that's the other thing you got to think. Keep in mind, like we've talked about this in the past, crypto market, traditional markets don't just roll over. Yes, you could have a black swan event, but then they get snapped right back up over a shorter period of time. And shorter, I mean months instead of years. And then the fact that we're hitting fresh high, all-time highs. This could be so once you get there and you stall out, you're still going to need months of a topping pattern before we start dropping. So the fact that markets keep going up, that tells us, there's more risk to the upside for the traditional markets. That gives crypto more time as well. So we shall see.
Very true. And speaking of ETFs, by the way, small update here. Fidelity coming to us from CoinDesk here. Fidelity moves to add staking quarterly payouts to its near $900 million Ethereum ETF.
It's about time, man. They need to catch up with Grayscale. They've been doing it already they've already been doing this since January. Where they been?
All right, Fidelity Ethereum with at least 900 million net assets could stake as much as 100% of its Ethereum under normal conditions. Though Fidelity set no minimum, according to their amended registration statement, the fund would keep some Ethereum available for redemptions, expenses, and other liquidity needs. The shift follows an IRS safe harbor bulletin issued back in 2025 November that lets qualifying crypto trusts stake assets without losing their grantor trust tax status. Fidelity would join Grayscale and 21 Shares in addition to other existing Ethereum funds. BlackRock took a different route by introducing separate staking products, but in this case, Ethereum would retain 85% of gross staking rewards, while the remaining 15% would go to fund the sponsor, custodians, and node operators. Yeah, a little bit of a case being late to the party here, but Fidelity is a large player. They are, especially when it comes to the Ethereum ETFs, they are one of the larger players, and actually seeing them joining the rest of the market when it comes to staking this stuff, it appears that the ETF game is actually kind of, evolving and really taking advantage of all the things that come with Ethereum as opposed to Bitcoin ETFs.
I will say this. Which ETF is it that they're talking about? Is it the Fidelity Ethereum Fund? Is that the ETF that they're talking about?
Yeah, Fidelity Ethereum Fund.
Okay, yeah. Okay, so that has my attention because here's why. We talked about this a couple shows ago. Was the fact that Ethereum, first of all, Fidelity's been on the block since the beginning. They've been buying Bitcoin since 2012. They've been around here longer than most people could even imagine. They were way ahead of the game than anybody. Grayscale and them were probably two of the big guys on the block that saw an opportunity, and they've been buying it up hand over fist since then. So they are massively in profits because they bought so early. Now, the thing that has my attention is I love this because now you bring in more competitors. There's not that many ETFs that are paying out dividends through Ethereum staking. First of all, there's a few, right? Now keep this in mind. The Grayscale Ethereum that has the staking ones is expensive. That's the ETHE one. That was 2.5% fees. That's extremely high for an ETF fee. That means that no matter what your gains are for the year, you're going to pay them you're basically going to pay them 2.5% of your gains or your home. They're going to get that. That's a nice tax for them on top of you. So the fact that there's more competitors coming to the table will be very interesting because right now their fees are currently 0.25%. So it's a quarter. It's only 25. It's only a quarter of a percent versus 2.5%. That is a massive decrease on fee shares. And they're structuring it just similar to Grayscale's, by the way. So I'm just curious, did they say anything about fees? Can you search in here about fees? Just search fees. I'm just curious if there's anything where the fees is in here because I just want to know if they're gonna
nothing about fees.
Because I was curious if they're gonna increase the fees because of this. Because of that, but if they stake it, the staking itself would pay for the overhead cost. That's why they were talking about that. Yeah, 15% goes to service provider. So that's what that's going to handle, the overhead costs. So this is where I'm going with it. That I love it. There needs to be more competitors because right now the Grayscale products that allow the dividend staking things is expensive. 2.5% is definitely on the high end. Like typically when you get 0.5% to 0.75%, you're starting at, that's about where you want to be. Anything above 1% more, that's expensive. 2.5 is very extreme expensive. So putting that in perspective.
Yeah. I think that this might even, I'm not saying that your theory about Ethereum being the first one to take off being completely true, but this could be one of the contributing factors to something like that, or at least in this next cycle, the Ethereum ETFs and other ETFs aside from Bitcoin actually performing on pace with Bitcoin or even potentially outperforming it. Because the way that I'm seeing it right now is that pretty much if you wanted a Bitcoin ETF, you've had the opportunity. The money has shown that people that wanted it got into it. All the other ETFs, Ethereum, XRP, Solana, that kind of stuff, they have not had nearly as much market share capture as the Bitcoin one. And with some advancements in maybe the technology, I know it's the classic, we're here for the tech, but with the advancements in the technology, in the fact that it can actually pay out somewhat like a dividend, it could attract a new crowd, or it could entice the people that got in on the Bitcoin ETFs previously to maybe start allocating to all these other ones. And if that's the case, that means money going in equals price going up. So that's my personal take on why I think that this one is kind of important, not just because Fidelity is one of the largest Ethereum ETFs out there, and this is a significant upgrade, but the fact that this could be some of the early rumblings for what we're going to see play out over the next 2-3 years.
Yeah, I look at it also like this. I'm agreeing with what you're saying, and let me tell you what I thought. This is how I'm thinking. And I think it's what you said. I'm just going to say it a little differently. I look at it like this: Ethereum ETFs are now going to provide dividends for investors. So I get to hold I get to pay while I hold my positions, right? These also, the other thing is for these large ETFs that are staking these Ethereums, depending on how long you stake. So when you stake Ethereum, there's a time you have to stake it for, right? So that's going to lock up more Ethereum. Thus, it's going to put less selling pressure. It's going to decrease selling pressure because more of it's locked up because people are trying to get that dividend yield that's coming out of it. That I think is what you're alluding to. That part there was why we're going to probably have more pumps coming up here or more sustainable in Ethereum because of that. Bitcoin doesn't offer a dividend on the ETFs. Ethereum can. You're starting to see it now. And I guarantee you're going to start seeing people flip over to there saying, oh, I get a dividend. Oh, I get how much? They're going to start seeing that. So for example, I think I ran it. I want to say it's about 3%, 3.5% dividend you'll get for these ETFs over the year. And I think some of them pay them out quarterly. Some of them pay them out monthly. You have to look at that though. But yeah, you got to pay, you're getting paid to hold. And then what are you doing with that? Well, I tell you what I do with it on my other investments. I take that dividend yield, stick it into a dry powder, and then when opportunities exist, I deploy it. And that's what I'm doing there on top of other dry powder distributions that I'm putting in, but it just adds to the dry powder pool. And that's it. Keep in mind when you're in these products, you can either have it automatically reallocate or you can have it not reallocate. And if you know how to do that, once again, we're here. We can help people with that too. There's a lot of ins and outs of this stuff. I've been watching the TradFi world with these products. It's funny. They've been trying to figure out how do I take crypto and fit it into our traditional products. That's what they've always been trying to do. And there's going to be more of that coming. And certainly staking is going to be a big one out there.
For sure. Alrighty, tell you what, we got a few more to get to, so let's keep it rolling. Up next, public Bitcoin miners cut the hash rate 13% as AI infrastructure revenue grows. All right, let's see what we're looking at here. Nope, I need this. Publicly traded Bitcoin miners are cutting their capacity faster than the Bitcoin network overall, suggesting that more operators are redirecting electricity and infrastructure towards data centers and high-performance computing, HPC, and another sign of the sector's evolution beyond creating more crypto. In the latest Miner Weekly newsletter, the Bloxbridge Consulting reported that realized hash rate among a cohort of public Bitcoin miners fell from 368 exahashes per second in the fourth quarter to 319 in the second quarter of 2026. That's a 13% decline. The contraction was even sharper when excluding BitDeer, which continued to expand its mining operations. Without BitDeer, the cohort's realized hash rate fell 21% over the 6-month period. BitDeer's realized hash rate, meanwhile, increased 44%. By comparison, the Bitcoin network's average hash rate declined 10.6% over the same period. The shift comes as more miners report a growing share of revenue from non-mining activities. Core Scientific generated $136 million in co-located revenue during the second quarter, compared to just $27.5 for Bitcoin mining. TeraWulf reported $31 million in HPC lease revenue, compared to $12 million from mining. Core Scientific and TeraWulf are now generating the majority of their revenue from non-mining activities. Riot Platforms and BitDeer remain much earlier in the transition, with Bitcoin mining continuing to account for the vast majority of their revenue in the most recent quarter. Bloxbridge framed the current pullback as an unwinding of the expansion cycle that followed China's Bitcoin mining ban back in 2021, which triggered one of the sharpest declines in network hash rate before rapid recovery as miners relocated overseas. In North America, the migration helped fuel an expansion among public miners, which raised capital and acquired new power sites to expand their operations. One halving cycle later, the economics have shifted significantly. Weaker mining profitability, coupled with surging demand for AI infrastructure since 2022, has prompted several public miners to repurpose sites and power capacity away from Bitcoin mining entirely. All right, that was a lot of numbers and a lot of jargon. Let's try to pull up a chart here. So this is the Bitcoin difficulty regression model. Remember that Bitcoin difficulty, as in how hard it is to actually produce the blocks, is something that fluctuates with the amount of miners that are actually coming in. So this is showing pretty much the last 10 years of activity. And you can see we have steady growth, but we also have this little blip right here. That is when China banned Bitcoin mining. So decent little drop. And keep in mind, this is also on a logarithmic scale. So pretty much going from like a halfway point to a halfway point. That's not a 2x. It's closer to a 10x. So keeping that in mind, if we zoom in a little bit and we look at what's going on now, The Bitcoin mining difficulties actually dropped since we had our peak back in October of 2025. There have been some significant drops along the way, and that's largely just due to when price goes down, the cost of electricity doesn't go down, so it literally becomes unprofitable to, keep the miners going. And that's part of just kind of like the natural business cycle when it comes to Bitcoin, which is that miners do get flushed out eventually if their rigs and the systems they have become unprofitable. But what we're looking at here is that this is one of the few times that we actually see a regression over a decent amount of time. Granted, it's not a massive one, but the chart is going down and to the right, pretty much starting October 2025 to where we are now. So, in the layman's terms, it means that there's something else that the miners are doing. And if they're not mining Bitcoin, it means they're opening up their processing power to other people that are doing either AI or high power computing. And as a result of that, it's kind of one of those narratives that we've been talking about for a long time is what is going on with AI? More data centers are needed. Bitcoin's kind of fallen off on this one. Not saying that crypto's dead. That's not the point of this. But we're saying that there are other priorities going on right now when it comes to Bitcoin. And Bitcoin is really one of the last few cryptos that actually relies on proof of work technology as opposed to proof of stake. In my opinion, this could be one of those things that helps really boost up that Ethereum to Bitcoin ratio that I know you love, Tracker.
Well, it's me. I mean, any altcoin person's going to be love that chart because I mean that tells you when you have altcoin season. But yeah. Yeah, but it's always interesting to follow the hash rate. How much does it cost to mine? Because that tells you. It also tells you kind of a little bit different than what the story was saying, but basically what you're saying, and we also use that as a bottom indicator, because you can see when Bitcoin becomes very, very cheap, or it's getting so cheap that it is very more profitable for miners to mine it than it does when it gets to certain exacerbated levels.
That's true. And I know that this story is kind of one of the smaller ones in the segment, but it's part of the narrative that I think we're trying to weave tonight, largely because I'm not a miner. I'm pretty sure you're not a miner. And I don't think anybody watching the show at kind of like the levels of what we're doing is a miner, just because the technology required to do so has grown so massively that you have to have very specific, very expensive, and solely dedicated computing technology exclusively for doing Bitcoin computations. And that kind of stuff, it's expensive, it's difficult to run, and it takes a high degree of expertise. But the overall sentiment that we're getting out of this story is that there's a shift. Miners are actually cutting the hash rate by offering their services elsewhere, and they're being paid decently handsomely for it. Like they're actually making more money doing the other stuff than they were doing Bitcoin mining. And that's largely just due to the AI narrative.
Like makes complete sense, man. Hey, man, people are going to go where the money's treated best. That's what all that's going to do it.
Exactly.
Period. People are going to go where they get their money, get treated the best. That's where they're going to go. Where's the best investment? I'm not going to waste my because they paid a ton of money to set up these rigs and these environments. These are massive.
So much money.
So it's funny because so these cloud farms, it's interesting because one of the worries they always have is hackers getting in and using their servers for these big massive farms and exploit to their servers, because then they'll start doing Bitcoin mining on them and things like that using that, because you can imagine the computing power of these AI centers are just huge, and the processing power is massive. So yeah, you could seriously do a lot with them. I'm kind of shocked that I'm sure that there's an investment aspect to it, but even these farms, they get to a point where I'm sure they're looking at all ways to make profit. So they're not going to have these machines just sitting idle. That's for sure. So
that's true. But that pretty much is kind of like the final point that I want to get to with the overall narrative. Berkshire Hathaway is starting to reinvest. We see that the Ethereum ETFs are actually starting to offer staking. We have differences in Bitcoin mining, and then we have a handful of other just like loose stories that weren't important enough to make the news tonight. But like, for example, World Liberty Finance and the crypto.com, the Crow token company, those guys are starting to cut ties and focus on other things. So the overall narrative that I'm really trying to paint for this week is that shifts are happening, and it's not just singular large shifts. It's a lot of small little things. And I think that this is kind of like low-level rumblings that kind of indicate what's going on with the overall market, because we're at a point now where we are actually hunting for a low when it comes to the overall crypto cycle. Granted, I still happen to believe that 4-year cycle is going to be true, and we're looking for November of 2026 for it to come in. But when we start getting these rumblings and this turnover, that's churn. Churn starts creating differences and some, volatility in the market. that's when we can actually see maybe that final dip come in and then start to have the rebound off of it and start the bull market. So, again, the overall point is we're seeing changes. This is the bear market. A lot of people aren't paying attention, but people are making moves now that will impact positions in the future and will impact how this next bull market plays out. So, as it stands, I happen to think that Bitcoin might have been the darling of the last cycle. I don't know if it's going to be as much this time around. I think it's still very much a bellwether just because it's so massive in the overall marketplace. But I think that we might not see the outperformance like we saw last cycle. And if that's the case, it either means that Bitcoin underperforms or everything else overperforms. Other things are getting ready to perform pretty well. We had the the Ethereum saga, the trilogy of episodes where we talked about the Ethereum Foundation actually gearing up to improve stuff. We have the ETFs offering staking. We have all the different wars going on when it comes to fighting over the market cap and trying to stake 5% of the Ethereum supply themselves. All that kind of stuff. I think it's the rumblings. I think we're continuing to see the churn. And I think that this is the environment where we will find the low. I'm not saying it's coming in the next month or it's like here already, but I'm saying like the signals are kind of pointing in a direction. And that's what I'm trying to line up.
Yeah, there's a couple other small stories I sent you I wanted to cover too. The Harry Ye one I wanted to cover because that's a whole nother narrative that's starting to spark, that you're starting to see big players in the crypto markets that are having these really weird deaths that keep happening. Yeah, Harry Ye. So for those who don't know who Harry Ye is, if you were invested in Phantom, the Tomb, Tomb and all those, and the staking rewards and all those back in the day, Harry Ye was a big proponent of Phantom and everything like that, and wanted to share the story because it's a very odd story. If you read it, it's not very long, but it's interesting because he's a major player in crypto. He's always been a big player in crypto. And the fact that he just died, and if you read the story, there's definitely foul play here. I allegedly, I'm going to say that there's definitely foul play just because if you read this article, it is very, just read the article and it'll speak for itself.
All right. Police and prosecutors are investigating the circumstances of a fall and what happened in the apartment before. Harry Chun-Tak Ye, also known as Harry Ye, founder of Quantum FinTech Group and a prominent supporter of the Phantom ecosystem, was found dead after falling from the 30th floor of a building in the Asunción's Trinidad neighbor August 7th. Police responding to the emergency call found him completely unclothed body on the ground at about 4:30 in the morning. Authorities searched the apartment where he was believed to live and found the doors open and the interior heavily disturbed and no one present. Investigators also visited the 27th floor where the victim's 29-year-old Brazilian partner resides. She told authorities she did not know what happened. The public prosecutor's office ordered the body to be taken into the morgue for an autopsy and full identification. Speaking to Radio That, their police chief inspector said the case is still in its initial phase and authorities are keeping all possibilities open. According to investigators, have not yet established whether the crypto entrepreneur died in an accidental fall by suicide or as a result of third-party involvement. They confirmed that prosecutors had sought a search warrant for the victim's apartment as part of the investigation. Identifying the deceased has been challenging because of the extensive injuries caused by the fall, which was estimated to be around 100 meters. Police and prosecutors continue to gather evidence to determine what happened inside the apartment before the fatal event. Well, that's odd.
I just find it interesting. Fully unclothed, 4:30 in the morning, fell out of a 34th floor fall in Paraguay. I mean, horrible way to go. And obviously, if you read also, they said that the room looked ransacked. Yeah, obviously there's foul play involved. I mean, come on. I mean, that's my interpretation. I don't know if it's true or not, but I'm just going to say it seems pretty strange. The reason why I'm bringing this up, this is another narrative that keeps happening in the crypto world. It's like dark side of the crypto, especially in DeFi, with founders, a lot of big players out there a lot of big crypto investors and players who just, this keeps happening. And I like to look at these stories just because to see maybe how the narrative, how the landscape is changing and shifting. I still think there's more big players coming to the markets and there's more centralization. I'm not saying that this is necessarily tied to that. I'm just saying all these unusual stories just keep happening. Then you throw in all these other weird stories in here, like the FTX debacle that happened and everything. The crypto world is insane. You could create a hardcore docu-series on everything that's happened in crypto since, we'll say, 2021. Just start there and work your way to now. And there's a lot of this. There's a lot of this, and there's a lot of other shiesty, people stealing money and doing stuff. It's just a dirty part of the crypto industry, and you got to ask yourself, why is all this stuff happening? Well, it's simple. And this goes back to our security we talk about. Not trying to dox yourself, trying to keep yourself organized and safe. Don't disclose what you have out there. Use best practices and out there and stuff like that. Harry A was a huge investor. He had a big target on his back. So, and he was known to be a disruptor. So there's a lot of heat there that he could take for that. Maybe he had investors that were mad. There's all these whatever. There's tons of reasons why this could have happened. If supposedly it was a suicide, not a suicide, we'll say. But yeah, a lot of this keeps happening with a lot of big investors. And what I'm going back into it is, this is why you shouldn't be doxing yourself. This is why you should be hearing best practices. And more and more of these things keep happening with these big investors. And there's also, and not to say this is going to happen, and I'm certainly not condoning this, not saying this, and I'm not trying to stir up things, but like MicroStrategy with Michael Saylor, this is just another narrative. So anybody who's a big investor who's holding large amounts of crypto are threats. And they should be taking appropriate cautions and security, because the fact that they're sitting on stockpiles of actual money. Now, the company itself is, I get that. But this has happened numerous times over the last few years, that big players have been getting taken out left and right, or just disappearing, and freak accidents too. These aren't just, some freak accidents. Finding a guy with, 3 shots in the back of the head is not a suicide. You know what I mean? Yeah. Like, I get it. I'm putting my conspiracy hat on, and I get all that, and it's a little bit down there. But I think, this is crypto. You need to understand what's happening with the landscape, because you will see shifts going along, and I think this does absolutely disrupt DeFi because of this, which goes back to the same narrative we talked about last week, which was governments out there are looking to see who owns stuff. They're trying to take your crypto. They're trying to tax everything. Europe, I'm looking at you. I'm looking at a lot of places out there. Like, there's a lot of this stuff going on in DeFi, and it's because they want TradFi to regain the centralization of what money is. DeFi is on the fringe of it, and that's the problem. It's threatening the whole. And hey, listen, if I was a central banker and we control a lot, I'd look at this as a threat. This is a problem over here. How do we get this down? Well, one big way you can do it, and I'm not saying going out there and doing harm to people. I'm not condoning that at all. What I'm saying is, what you can do is you can create a lot of FUD. See, this is why it's not safe. See, and I think you're going to start seeing more and more stories come out about people being attacked and things like this happening. I think you might see more and more of these articles getting much more louder, I guess, when they broadcast them, to say, see, this is why you should give us all your money and put it in a central exchange and not DeFi your own. I mean, just saying, these are the things I could see happening. Just, I think, and in the crypto world, we like to report on all the news, and this was a big news. I mean, Harry A was a big investor. He was huge to the Phantom ecosystem, and at the time, Phantom, the network had some of the coolest tools. Certainly in LP farming, staking rewards, the way they structured it, Spooky Swap, the interfaces, how they were done. They were definitely leading the way in DeFi, without a doubt. They were ahead of the game.
Yeah, unfortunately, price action has just continued to fall out the ecosystem. Believe me, I still am a huge Phantom fan, and well, it's now Sonic, but I know it sounds super nerdy, but one of the things that I was most excited about is that there was like an old press conference or like TED Talk the founder was giving. He's like, yeah, what's different about us is that we're trying to be faster, and we're being faster by being more efficient. We found a way to store the entirety of the blockchain 8 times more efficiently via size than pretty much anything else. And I was like, oh, you have my attention.
Mm-hmm. Yeah, exactly. So it sucks, but these are stories that happen. I could really list off probably about 25, 30 of these other types of events that have happened over the last few years with big major investors. So just saying.
It's weird stuff. I mean, I don't think any of us are ever going to get to the level of these guys that we may or may not be targeted by some sort of goon squad to get rid of us. But it does, like you said, it goes back to the basics. It's why when you mentioned that Trezor had their shipping manifest leaked, why it's a big deal. It gives your address to a name, and it tells you what you may or may not have, and
Dox
potentially
you.
creates an issue. Yeah, exactly.
Yeah, it
And like we
dox you.
talked about, God, it was probably a couple months ago, we did a little roundup on the what's been going on when it comes to IRL attacks of people trying to get their fingernails plied off to give up their seed phrases. And like, yeah, France was leading the pack by a good margin there. So I don't know.
Yeah, they were, man.
Yeah.
There's one other story I wanted, a small one, and it was really on
Yeah.
the Harmony hack that happened over the last day or two. This one was interesting. So Harmony is just another L1 token. It's out there, and this isn't the first time. It's a trash network. I don't care. I'll
Won't be
bash it
the
all day
last.
long. Well, the reason I knew about it was DeFi Kingdoms, which at the time not necessarily a great investment, but a great at the time cutting edge from the not the gameplay by any means, but the way you had an in-game assets and you could trade the markets with the assets you had in the game, but not just that, but you also learned how to bridge across the different in-game uh, worlds that were also switching networks in between. And so you're
Yep.
actually doing this at a time. So you could really learn DeFi, a lot of DeFi just in that ecosystem. You could really learn how a lot of stuff works, bridging, swapping, the assets trading in pairs, NFTs, all that stuff. Now that was actually pretty interesting back then. Now it's not so much, but if you don't know about DeFi, you learned a lot with that. Well, anyhow, they were on the Harmony One network first, and one is the L1 token. So I know that this because in the in-game asset, it was funny because that world had gotten destroyed and it completely went away in the game. It got blown up basically. There was nothing left. There was remnants of it, and so they were able to somehow take the destruction of the network, or because they got off of it because it was just already it was already compromised at the time. You could bridge your assets over, and that world had gone away. It was interesting how they did it within the in game. It was very creative how they did it. I thought it was pretty cool. But in this case, basically what happened was a person went in here and minted 4 billion tokens of the L1 token, and it just tanked the price because they were bridging these funds over to central exchanges and dumping the price. And then of course Harmony, the representatives reached out to all the central exchanges and said, if it's coming from any of these addresses, can you please stop and block all these transactions coming in? Well, they already had done damage before that. They didn't get everything out there, but they got enough to make it worth their while. So
Yeah.
not all networks are created equal. That's what I'm going to say. And I'll go back and I'll certainly go with this. The fact that you have tools like AI now, sky's the limit. The advantages are in the hacker's hands. They have the full advantage because they have nothing but time. They got the tools, and now all you need is the persistency to figure out what you're trying to do. And that's really it comes down to it. And you don't have to be brilliant at hacking. Like there's Black Hat and Red Hat hackers, that teams that hack companies that try to exploit those companies, but they brought in Red Hat hacking teams that are coming in and try to hack them to try to boost their protection. So how do you beat a hacker? You beat a hacker with a hacker, essentially. So this is why you have hacking thons and techniques and strategies so people can stay up to date with the latest and greatest, things like that. But once again, another L1 token goes down, another network. So this is probably the death in they're done.
Unfortunately, but you're probably correct. Yeah. It's probably just going to be a slow death after this point. This is the big drop. It's just going to be down to the right from here, I imagine.
Yeah, it caught my attention because I was there looking at price action, and I saw that the Jewel token, which is the main, we'll call it the main end game token for DeFi Kingdoms, went up 237,000%. So I was like, okay, this is interesting. Obviously, I thought it was a glitch in the system, but that it was tied to the Harmony the Harmony network. So that's why the prices had just got all out wonky because of this. Is what happened. Like you're not gonna be able to sell that. It's not gonna work. But I'm just letting you know that I thought that was interesting.
Yeah, something liquidity pools, slippage, all that stuff.
Mm-hmm. Yeah, exactly. yeah. So anyhow, so there's that. But
true. Which, by the way, folks, if you're interested in liquidity pools and slippage, security, and the latest and greatest in DeFi, we actually, or GameFi, we actually are some pretty big GameFi fans over here. But more importantly, what I'm getting at, you can find all that information inside the private Telegram that we operate, where you find the latest and greatest from us, live streams, questions and answers. Now the new pulse chain bridging tracking protocol that Dace is posting as well. You can find all that inside our private Telegram. Head on over to the website, walktheblockndf.com, head over to the membership tab, and that is where you can find the sign up for that. And which, by the way, around here we like to say, the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together. private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us.
Yeah, and it's $40, $40. That's the other thing. If you get in there and you don't like, you can cancel anytime. It's not like we're
For
holding
sure.
anybody's feet to the fire. But I think that it's been interesting because some of the conversations we have internally, we have been starting to light the fire and everybody say, dude, start getting your house in order, start getting your positions are. The movement in Pulse Chain was kind of you could see people are starting to wake up like, oh crap, everyone's coming out of their slumber because there's like some movement. So it's like, you got to start getting yourself in order, start getting things prepared. What are you going to do? What are you going to get into now? If you've been on the sidelines with tokens, what are you going to bridge them into? What's your allocations? What are your price targets on various levels? So you can then know when to take off, because you don't want to be fumbling the bag trying to figure that out. Well, it's going up because human emotion is going to get you wrecked. Because you'll be getting out there hearing like, oh man, it's got another 5x more to go, man. We're gonna let this thing ride, and then you get rug. It's just we stress it a lot. Have a game plan laid out, have your prices already in place, and make your decision, have everything laid out, and then when those things come, you just execute what you've already said you're going to do. Don't sit there and second guess it.
True. I think it's not just like our own community, but what I'm seeing outside in the rest of the world is that the night of the bear market is still very dark. But I think people are starting to sense that the sunrise is coming, and it's coming in a realistic like soon. So it's not too crazy to say that by the end of 2026, we actually start to see prices start moving towards the upside. And when they do happen, they happen quick and kind of suddenly, and sometimes even without warning, like we saw in the last cycle. Yes, we did get the FTX bottom that created the true bottom, but the rise that really started the bear market, when we kind of went from that like $18,000 Bitcoin level and we jumped all the way up to 25 pretty much in the course of like a week or two, that was pretty quick and pretty sudden. So I think we're starting to sense it. I think other folks are starting to sense it, like the people that have been around the block for a while. But yeah, that's what we're seeing out there. And staying inside the Telegram, staying active in there will help kind of keep your spidey senses tingling for when things are coming down the pipe.
Yeah, and just another thing, like we said earlier, I mean, the fact that crypto markets didn't even budge when the Clarity Act was just pushed down to September. Nobody cares. Like, doesn't care. It's like
that shows you how depressed it is.
And when the war sparks back up again, it was like crypto didn't even care. It's because you've exhausted your sellers. You typically are going to be at a point, and when you start seeing that bad news is just shrugged off, or markets just start going up on no news at all, or even better, if it goes up on bad news, that's just a sign that the bottom is in.
If it goes up on bad news, that is a massive indicator, by the way, because what that signals is that, oh, this is finally the end. I'm going to try to get in before everyone else, but there were 5 dudes that had the same thought before that guy.
Yeah, yeah. Or people are thinking like, it's fine. I don't need it's bad news, but it's like whatever. Prices are so ridiculously cheap. This is going up. Like it's case in point. Like I say, let's say the Clarity Act comes in September and they can't come to an agreement, and they decide they're not even going to be voted on it at all the rest of the year, and it starts to go up on that news. It's that would be kind of what I was looking at. That would be just a small example of what I would say. Or if all of a sudden panic starts happening, overall traditional markets start rolling over and crypto is just going sideways or starts grinding up while everything else is going down. Things like that would be a huge indicator that people are just rotating into things that have just not moved and they're ridiculously cheap, because investors are always going to look to where can I move my money that I can invest in to make money. They don't want to sit in cash and just sit idle. So they're going to look to rotate. Do they rotate in? Does that kill the narrative that, oh, crypto is lumped into this risk on asset? I don't think you can throw it in there because it didn't rally when everything else has been rallying. It's been going sideways. So does it stop tanking when it's been trading on its own for a while now. It's decorrelated. It definitely has decorrelated over, since probably since the war kicked off with, probably since the Venezuela time. It feels like it's kind of decoupled since then.
I would even argue it's been longer than that. I think ever since we hit the top of the market, that was the start of the decorrelation. Because at that point, a lot of the narrative was, is crypto just rising because of correlation to the overall market? But once we hit that point, it was just downhill while everything else was still going up. And to me, that really marked it.
Yeah, that's fair. And that's fair because it was going up with the overall markets, and then it just started rolling over, and while everything else is going up. Yep.
True. Excellent. Alrighty, sir. Any final thoughts before we get out of here?
For those that are not familiar with any of the pulse chain stuff, I would advise you to probably get in there and look at it. Take a look at it. It's its own chain. It just forked Ethereum 3 years ago, and you have copies over there. So if you've got if you were in a crypto 3 years ago, you've got copied versions over to Pulse Chain because they literally forked the Ethereum network. And now that we might just shrug your shoulders. I'm just saying you need to get in. There's a lot of stuff going on in there. A lot of good
Free
cool
real
stuff
estate.
that's happening. Yeah, and you're getting in, and if you were to put, it's interesting. If you were to put, any significance of money, I don't know, $100, 1,000, whatever. If you put any of these, you're getting at these depressed levels, these ridiculously depressed levels. So prices could 10x from here and still not even get back to its original highs. It still would have more run to go. So what we're saying is like it's ridiculously cheap and a very, very thin liquidity. So it's something to keep your eye on. If not, then understood. And then I'd say next thing is just keep watching that Ethereum BTC ratio and ETH itself kind of grinding sideways. We might just have more sideways action. I was looking at the Ethereum BTC ratio, and it has been bumping up against a long-term downtrend line that I was watching. I did see that, but it still needs to have conviction. You can't just kind of break out. It has to have solid conviction. When I say that, meaning big volume comes in and you see a big push. So if you zoom out on your chart, zoom all the way out to where
this is the weekly, by the way.
Yeah, that's fine. You see trend lines where it's starting to try to break trends. Like it's bumping up against these down trend lines and stuff that it's trying to turn around. So it's just an interesting pattern if you look at that. Like we had a big pump up, now we've been kind of grinding down sideways. Now we're trying to reverse. It's like a wedge, and it's a wedge inside of a wedge, and it's trying to figure out what to do next. So. And it was crossing over those. And then, of course, the Ethereum price is still hovering below the 200 weekly moving average, while the Bitcoin price is just hovering right on the 200 weekly average. So I would just say more patience here, of course, and that, get your house in order before things start to move. And build your shopping list now. What prices are you looking to get in at? What prices you're looking to get out at? All that stuff. They should be doing it right now. And of course, address security. If you've never had to address security, get on that ASAP.
Absolutely. Step one.
If you don't know, we're here.
That's very true. We've done a lot of the security stuff just because it's so important. So trying to just show that with the amount that we talk about it.
And we've seen a lot of disaster stories. So, God, it's gut-wrenching.
It really is. I will say,
shout out to Cold Wallet. Well, just shout out to Cold Wallet. God.
If you or you know anyone that has been affected by the Cold Wallet hack, please DM us. I would love to hear these stories because I don't know anybody.
Mm-hmm. I don't suppose there's 70 million, so.
As far as what I'm seeing in the near future, here on the side of the United States, we're gearing up for midterm election season. Obviously, it's not as big as the presidential election season, but I think this one's shaping up to be pretty important for the overall shape of the government. And in particular, we care because we have a very important piece of legislation that we're trying to get passed right now called the Clarity Act. So we got one final look in September. After that, realistically, don't expect anything until 2027, which I know sounds crazy to say in August of 2026, but realistically, that's what the calendar looks like. So keep an eye on that. I'm going to keep an eye on Pulse Chain. I think there still could be a bigger pullback that might be a decent entry point. I'm saying that when I'm looking at Elliott wave theory and what kind of pullbacks come with that kind of stuff. But big month for Hexkins and Polskins. Shout out to all you guys that have been here. By the way, I know one of my good buddies, RH Max, he's been streaming nonstop like an animal, like he always does. He hasn't gone anywhere. A lot of the Pulse Chain folks, they haven't gone anywhere. So with that being said, that is pretty much all we have here for you tonight. If you want even more, hop inside the private Telegram, as we've already mentioned plenty of times on the show tonight. But more importantly, we'll see you guys next Thursday, 9 p.m. Eastern time for, as always, our free YouTube live stream where we talk about the latest and greatest with what's going on in crypto and kind of help piece together the narrative that we're trying to pick up for the season, which current season is bear market season. So you can kind of expect the news that's going to come along with that. But regardless, thank you all very much for watching this evening. We hope that we'll see you guys next time. And until then, I hope you guys have a fantastic weekend. Till then, ladies and gentlemen, good night.